Dag, welcome to Citi.
Thank you.
And congratulations on the publication of your co-authored book, Public Wealth of Nations. And thank you for your co-authorship of our GPS report of the same name.
It's a pleasure.
Dag, in reading the report, this strikes me as an emerging mega trend. You talk in the report about a gold mine of public assets that are out in the marketplace. Can you maybe explain what they are?
Yes. We normally think of state assets or public assets as corporations that are visible to everybody. But really, the bulk of the assets are real estate, and often real estate in local governments that are not as visible to the public, to investors, not even to the governments themselves.
So that's interesting. So where those assets are not always at the central government level then?
No, you could say that probably 1/3, if even less, is at the central government, and at least 2/3 is at the local governments.
Okay. And do we know what these assets might be worth?
Well, we have an estimate that we have put together in the book, which we say is $75 trillion US. Now that is only book value and only the central government.
Goodness me, now that is equivalent to global GDP. That is greatly in excess of the public debt securities and issuance in the global economy.
Yes, and this is only book value. And so if you think about the local government side, it's probably 3 to 4 times this value.
Interesting. Now, in the book and in the report, we talk about a phony war between national management, nationalization, and privatization. Can you maybe tell us a little bit more about what you mean there?
Yes, we think it's time to stop talking about ownership of these assets, because that hasn't led to anything in the last 50 years. It has just led to the two sides of privatization, people arguing for either privatization or nationalization, digging trenches. And in the meantime, these assets remain unknown and without any transparency. So if we start talking about the quality of asset management instead and try to get a yield out of these assets, which requires transparency, we will be able to do much better help to the economy.
Interesting. Now, how to achieve this yield? How can governments make that leap to achieving that yield for future generations?
Well, first of all, governments need to do an asset list of what they have, be it real estate, forest, corporations, etc. And then secondly, a market valuation. Market valuation allows you to do and have an understanding of the alternative use, and which gives you the possibility to do an integrated business plan. And that could then be used in order to segment these commercial assets so that we can consolidate them into a holding company that would enable real professional asset management of these assets.
So how much yield might we be able to generate here? What is the upside, the financial development opportunity for the public sector?
Well, an improvement of 1% per annum in the yield of the global assets owned by central government would be the equivalent of the GDP of Saudi Arabia. So that's the size we're talking about. And if we would achieve something phenomenal as 3.5%, that would be able to fund the total spending on infrastructure investments annually in the world.
Goodness me, as a net new addition to GDP.
Yes.
Given the scale of this, given the global nature, Dag, and indeed the fact that it sits at central, regional, provincial, local government levels, it strikes me that the financial services requirements here to support this mega trend will stretch from advisory and restructuring. It will cross all of the capital markets across equity and debt capital markets. And in the report, you talk about the potential impact on inflation-linked securities, a potential renaissance of that market, and indeed a full spectrum of operational financing requirements for those operating companies themselves. I mean, this could be a wholesale change in one segment of the marketplace.
Yes, as Willem Bouter rightly says in the report, this will require significant innovation, both from the capital markets, from investment banks, but also from investors, to think about this in a completely new way. What the requirement is to get there is transparency. We need those asset lists from the government in order to be able to understand what is in there. And that will then have an impact on both debt, equity, and advisory.
So Dag, thank you for your co-authorship of our GPS reports, and indeed congratulations on the launch of your book of the same name.
Thank you.
We look forward to engaging yourself and our bankers with all of our clients, and particularly our investor clients, around this emerging megatrend. Soon upcoming some September events where we'll have public discussions in London and in New York on this topic, and we invite you back in a few months' time to hear and talk about some of the progress.
Thank you. Look forward to that.
Thank you, Dag.